In the heart of Omaha, Nebraska, during the 1930s, a young boy named Warren Buffett was already dreaming bigger than most adults around him. At just 11 years old, while many of his peers were busy with games and childhood adventures, Warren was about to make a decision that would set the course for his entire life, his very first investment in the stock market. While other kids played outside, Warren found himself captivated by the mysterious world of numbers, charts, and financial news. He would spend hours poring over newspapers, studying the ups and downs of the market, and trying to understand what made stocks rise and fall. Even at such a young age, he was fascinated by the idea that you could make money simply by being smart and patient. With a sense of excitement and a little bit of nervousness, Warren decided to buy 3 shares of City Service preferred stock for himself, and 3 more for his younger sister Doris. Each share cost just over $38, a significant sum for a child in the 1930s. This was not just pocket change, it was a leap of faith into a world he had only read about. But the excitement quickly turned to anxiety. Almost immediately after their purchase, the stock price dropped sharply to $27 per share. Warren felt the sting of loss for the first time, watching his hard-earned savings shrink on paper. The emotional roller coaster of investing was a lesson he would never forget. To make matters worse, Doris, his sister and investment partner, reminded him every day of their loss. She teased him at the breakfast table and questioned his decision, testing his patience and resolve. It was a daily reminder that investing wasn't just about numbers, it was about handling pressure and criticism too. Eventually, after weeks of waiting and worrying, the stock price rebounded to $40 per share. Relieved, Warren decided to sell, making a small profit for both himself and Doris. It felt like a victory, a validation of his efforts and research, but the story didn't end there. Not long after Warren sold, the stock soared to over $200 per share. The missed opportunity was a powerful lesson in the cost of impatience and the importance of holding on to good investments for the long term. This early experience shaped Warren's core philosophy. Patience and long-term thinking are far more valuable than chasing quick wins. He realized that true success in investing comes from resisting the urge to act on emotion and instead focusing on the bigger picture. That first trade was more than just a childhood experiment, it was the spark that ignited a lifelong passion. Warren learned about risk, the importance of independent thought, and the rewards that come from holding on to good investments even when it's difficult. These lessons would become the foundation of his legendary career. He discovered that investing wasn't just about making money, it was about discipline, patience, and the courage to trust your own judgment even when others doubt you. The journey of the Oracle of Omaha began with a single simple trade, a moment that would echo throughout his life, inspiring generations to come. Warren Buffett's roots in Omaha shaped his values, hard work, integrity, and practicality. Growing up in the heartland of America, Warren was surrounded by a close-knit community where everyone knew each other, and the importance of reputation was never underestimated. The quiet streets and modest homes of Omaha provided a backdrop that encouraged humility and a strong sense of responsibility from an early age. His father, Howard Buffett, was a stockbroker and later a congressman, introducing young Warren to the world of finance and public service. Howard's dedication to his work and his unwavering ethical standards left a lasting impression on his son, teaching Warren that success was not just about making money, but about doing so honestly and with purpose. Young Warren spent countless hours in his father's office, absorbing everything about investing. He watched the ebb and flow of the stock market, listened to conversations about business, and learned to read financial statements before most kids his age could even balance an allowance. By his early teens, he was running small businesses, delivering newspapers at dawn, selling golf balls door to door, and finding creative ways to earn extra money. Each venture was a lesson in perseverance and customer service, as he learned to meet the needs of his neighbors and build trust within his community. He even operated pinball machines in local barbershops, turning a simple idea into a profitable enterprise. Warren quickly realized that small opportunities, when managed wisely, could yield impressive results. He approached every venture with discipline, maximizing efficiency and reinvesting profits. Warren kept meticulous records, always looking for ways to improve his operations and stretch every dollar further. At just 14, he filed his first tax return, deducting his bicycle and watch as business expenses, a testament to his early understanding of the financial world and his knack for finding value in every detail. These early lessons in profit, customer service, and frugality became the foundation of his approach to business. He learned that every cent counted, and that treating customers fairly was the key to long-term success. Omaha kept him grounded, far from Wall Street's chaos. The city's steady pace and honest people reminded Warren that true wealth was built patiently, not through speculation or shortcuts. He learned the value of a dollar and the importance of living within one's means. Family discussions around the kitchen table about budgeting and saving left a deep impression, reinforcing the idea that financial security came from careful planning and restraint. The skills he gained from these ventures were as vital as any financial theory he'd later master. Hands-on experience taught him resilience, adaptability, and the importance of learning from mistakes. Omaha was not just his hometown, it was his first and greatest teacher. The city's values, its people, and its traditions shaped Warren's character and set him on the path to becoming one of the world's most successful investors. The seeds of his empire were sown in the neighborhoods of Nebraska, where ambition met humility and where a young boy's dreams began to take root in the rich soil of Midwestern values. Buffett's education at Columbia Business School marked a pivotal turning point in his life, setting him on a path that would define his future in ways he could never have imagined. The atmosphere at Columbia was electric with ideas, and it was here that Buffett's passion for investing truly ignited. After being rejected by Harvard, Buffett's disappointment quickly turned into opportunity. At Columbia, he found his true mentors, Benjamin Graham and David Dodd, two legendary figures whose teachings would shape his entire approach to investing. Graham, often called the father of value investing, introduced Buffett to a revolutionary way of thinking. Buy stocks only when they are trading for less than their intrinsic value, and always insist on a margin of safety. This principle became Buffett's North Star. Buffett thrived under Graham's guidance, earning the only A+ Graham ever awarded. He didn't just memorize formulas, he absorbed the discipline of analyzing entire businesses, understanding their strengths, weaknesses, and long-term prospects, rather than simply tracking stock prices. One of Graham's most powerful lessons was the allegory of Mr. Market, a reminder to ignore the market's daily mood swings and focus on the underlying value of companies. Buffett learned to remain calm and rational, even when others were swept up in fear or greed. After graduation, Buffett had the rare privilege of working directly for Graham. This was more than a job. It was a real-world laboratory where theory met practice. And Buffett could see firsthand how Graham's principles played out in the marketplace. This apprenticeship was invaluable. Buffett honed his analytical skills, learned to trust his own judgment, and deepened his conviction in the power of value investing. Every day brought new lessons and challenges. Graham's mentorship provided Buffett with an intellectual framework and a set of guiding principles that would serve him for decades to come, shaping every major investment decision he would make. He learned to stay rational when others panicked, to seek out bargains that others overlooked, and to trust in his own careful analysis rather than follow the crowd. These lessons became the bedrock of Buffett's investment philosophy, forming a foundation that would support his success for the rest of his life. Graham's influence didn't just make Buffett a better investor, it transformed his natural talent into a lifelong edge, giving him the confidence and clarity to build one of the greatest investment track records in history. In the 1960s, Berkshire Hathaway was a dying textile company. Buffett saw it as a statistical bargain, buying shares below their working capital value. A dispute with management led him to take control, but he quickly realized textiles were a dead end. Instead of propping up a failing business, he used its cash flow to buy other companies. His first major move acquiring insurance companies, which provided float capital to invest elsewhere. This strategy transformed Berkshire from a struggling mill into a powerful investment vehicle. With steady cash from insurance, he bought iconic brands like See's Candies, Coca-Cola, and American Express. The textile mills closed, but Berkshire's shell became a diversified empire. Buffett's genius was in capital allocation, turning a failing business into a legendary holding company. Berkshire Hathaway became the engine of his fortune. Buffett's success is built on a handful of timeless principles. His first rule, never lose money. The second, never forget rule number 1. He focuses on value investing, buying businesses for less than their true worth with a margin of safety. Buffett ignores market trends and popularity, seeking bargains others miss. Influenced by Charlie Munger, he shifted from buying cheap companies to buying great companies at fair prices. He looks for businesses with durable competitive advantages, a moat that protects profits. Quality matters more than a low price. He invests with a long-term mindset, seeing himself as a part owner, not a trader. His favorite holding period is forever. This patience lets compounding work its magic, turning small investments into vast wealth. Buffett's approach is simple, disciplined, and focused on fundamentals. It's a philosophy anyone can learn from. Buffett doesn't gamble on stock prices. He buys pieces of real businesses. He asks, "Would I want to own this company forever?" He sticks to his circle of competence, investing only in businesses he understands. That's why he favors simple, predictable companies: candy, soft drinks, insurance. He values honest, talented management as much as the business itself. For Buffett, the quality of leadership is as important as the business model. Market downturns are opportunities, not crises. He buys more of what he loves when prices fall. By thinking like a business owner, he's mastered the art of patience and long-term wealth. Despite his billions, Buffett lives simply, still in the Omaha house he bought in 1958. He prefers McDonald's breakfasts, drives himself to work, and spends his days reading and thinking. His passion is allocating capital, not spending it. In 2006, he pledged most of his fortune to charity, co-founding the Giving Pledge to inspire other billionaires. He believes wealth is a tool for good, not personal excess. If you're in the luckiest 1%, you owe it to the rest, he says. Buffett's life proves that true success is measured by what you give, not what you keep. Buffett's lessons go beyond investing. They're practical wisdom for life. Invest only in what you understand. Know your circle of competence. Think long-term. Let compounding work for you. Live simply and below your means, avoiding lifestyle inflation. Save and invest the difference to build financial independence. Embrace continuous learning. Buffett reads and learns every day, even in his 90s. These habits create security and opportunity for anyone, not just billionaires. The Oracle of Omaha's wisdom is accessible to all. Buffett's story isn't just about money, it's about living a rich life. He found joy in the challenge of business, not just the rewards. His partnership with Charlie Munger was built on trust and shared values. Buffett knows success isn't a solo act, relationships matter most. He once said, "The ultimate measure of your life is whether the people you want to have love you actually do love you." His legacy is not just billions, but a life defined by passion, integrity, and connection. Money is a tool, but meaning comes from purpose and people. The richest life is built on love, character, and doing what you love. That's the real lesson from the Oracle of Omaha.